but I'm going to talk a little bit about four things. How mining companies launch improvement programs that we've seen around the world, and initially they struggle to be successful. I'll share some of the things we see there. One of the things we've learned over sort of 25 years of helping mining companies improve profitability is that they don't spend enough time understanding and fixing something I will call wiring, and I'll explain what that is. Thirdly, there are quite a few mining companies, and I will share the 14 we're working with right now around the world, that are overcoming these problems. And I'll just take you through 6 very practical steps, how they do this. And then lastly, I'll show you a few, we call them results charts, of how their share prices, their costs, their performance has improved pretty significantly. Hopefully there's something you can pick up from this afternoon for those of you who are in a mining or in fact any kind of company. Let me move on. Okay. So here's a chart. This is real data. This is millions of tons coming out of a mine. Happens to be in Papua New Guinea. It's a gold mine. And I'm fortunate to have a lot of historical data on this. And if you look at this company, run by smart, intelligent, hardworking people, they have struggled to lift performance. So you can see here back in 2009, 2010, performance was declining. It started to go up. And they said, you know what? Let's launch an improvement program. Let's form a team. And they did, and actually performance went down. They actually got distracted. They diverted resources to a project of improvement, and things actually got worse. That's not unusual. They had a period that was pretty good. They invested a lot of money. Then they went out and they said, look, we're getting to a much bigger operation now. We're going to go get some professional help. And they hired, and I won't share the name of the firm, but they hired a very well-known consulting firm to help them. And in fact, performance declined again. And again, the management team, the consultants, were not stupid people. They were smart, intelligent, hardworking people, well-intentioned people, but they were unsuccessful. And I'll come back to this chart again at the end. But my point is people try and improve performance, and it's not always that easy, even when they work hard, even when they're smart. Here's an example of a client I had a few years ago, and when we started with them, we said, so guys, you're struggling to make money. They were losing money. This was an explosives plant. You're clearly all working hard. You're all very stressed. Let's make a list of what are all the projects you're working on to improve. And this list up here, or lists up here, is what came up. Hundreds and hundreds of projects. Now, this plant had 300 people. They had about 250 improvement projects. How many of them actually progressed, do you think? Not very many. Again, they were a distraction. There wasn't a priority. There wasn't focus. So none of these resulted in any improvement on the bottom line. Again, hardworking, well-intentioned people, but not getting results. Another example. This is a fertilizer manufacturer, quarry and fertilizer manufacturer. They actually took the step of figuring out, of their 60 improvement projects, what was the highest value and what was the highest ease. So they had started to do some prioritization, but again, the reality was 2 months in, 3 months into their improvement program, they hadn't delivered any money to the bottom line. So there's a lot of stories of well-intentioned, hardworking people being unsuccessful in improving. Well, that's sort of depressing, and let's make it just a little bit more depressing. We did some research at Partners in Performance a few years ago. We took the top 100 companies on the Australian Stock Exchange, and we measured all of their improvement programs. And we measured 3 different numbers. One was how much improvement value had been identified. So how many millions of dollars of improvement did people believe could be captured? Then we measured how much of that had actually been acted upon. Had someone started a project, changed something, and actually started driving improvement? And what we found is half that value never even got acted on. Half of that value was just left on the table and lost. Then we went back 3 years later, we measured of the original value, how much had actually been delivered to the bottom line and sustained that way. The processes had changed, the measurements had changed, the way the equipment was maintained had changed, etc. And we found that there was another loss of 50% or more there. So when you look at this picture, you identify 100 million pesos of improvement, and the reality is after 3 years, people are not even capturing a third of that, or 25% of that, much less. this is real information, these are real facts, real companies. It's a depressing picture. One would imagine you would want to do something about that.